Hey, it's Sarah Larbi, guest host and producer of Everyday Investor. We have another great show for you today. We're going to talk about the flipping strategy. That is when you buy a house, you do the renovations, and you sell it and make a great profit. And today's guest is Manny Cabral, and he's going to talk to us all about that, so don't go anywhere.
For one, I don't use MLS. I sell on MLS, but I don't look for flips on MLS. Strictly off-market properties.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hi, everyone. Lee here at Wise Construction Group and Legal Second Suites. So just want to bring the weekly tip for you guys in regards to construction and getting your projects off the ground. So one of the things we like to do at Wise Construction is make sure we are organized and ready to hit the ground running. And with some of the delays going out there, what we've been doing is we've been getting pre-organized with some of the materials that we stock to make sure that these things that are taking longer to get in, we have ready to go. So that can include things like arranging with electric utilities to have your meters and your layouts ready, as well as your water line upgrades, as well as your windows for your egress cutouts. If you'd like to learn more about this, feel free to reach out to me. You can reach me at lee@wiseconstruction.ca. Thanks and happy investing.
Welcome back. We are talking about the flipping strategy today, but before we do that, Omar, let's talk to you first about what's happening in the world of stocks.
Omar Khan here, guys, with a weekly market update. Now, the markets have had a rough start to the new year, 2022. It's been a rough start. And what is the concern? The concern is inflation. Inflation is running high, right? Cost of goods and services up. Therefore, central banks, Canadian, U.S. banks, have to raise rates. Now, they've said that they're going to raise rates, not said, but they're implied they're going to raise rates about 7 or 8 times in the next 2 years. That could be 1.75% from here, 2% from here, even higher, a little bit lower. But the clear direction the Federal Reserve and the Bank of Canada have said is we are increasing interest rates. That is pretty clear. The stock market doesn't necessarily like increasing interest rates in the short term. What gets hit particularly hard is growth companies and technology companies, and that's what we've seen. But as we've discussed multiple times, what ultimately drives stock prices higher or lower is the amount of money a company makes or doesn't make. Now, we're about to enter earnings season. Let's see how good earnings come in, and that'll give us a clear direction as to where we're going. But we're going to keep a close eye on inflation. See you guys next week.
Thanks, Omar. That was awesome. Manny, welcome. I'm excited to talk to you today all about flipping and making a profit on that strategy. Before we get into that, give us a little bit of background on who you are and what you do.
Okay, well, I own and operate a construction company. Been doing that for many years, which is Primo Reno Inc. We originally specialize in income suite construction. So we did a lot of client projects. We're probably one of the biggest out in Hamilton. But over the years, we progressed into strictly flipping. So we no longer do client projects. We only work on our own projects right now, so no more client stuff. We're strictly house flippers, and that's what we're doing right now. But I've been in the construction industry for most of my life.
Very cool. And just to get a perspective, like how many flips are you doing on an annual basis on average?
We're getting busier and busier every year. So this year we're targeting to do 25 flips to 30 flips. That's what our target is for this year, and it looks like we're going to do that. We're always working on multiple flips at the time. We're probably doing 6 right now. So hopefully we're going to hit our 30 for the year.
Very cool. So definitely a lot. And 6 at a time can definitely be quite a lot of work. Before we get into that, though, just out of curiosity, because this market is essentially a seller's market and there's not a whole lot of deals to be had out there, how are you finding your flipping deals?
Well, for one, I don't use MLS. I sell on MLS, but I don't look for flips on MLS. Strictly off-market property. So I have a pretty big marketing campaign that I do up here in Simcoe County. That's how I get all my properties. So I've basically got Google ads, Facebook, radio, flyers, all combination of all of those. And I'm very consistent with it. And we do quite well with that. So we do go through a lot of leads before we close on the property. But I've been able to create that lead generation where we're buying quite a few off-market properties.
All right, amazing. So you're negotiating directly with the sellers, trying to figure out how you can make it a win-win and solve their issues. Can you give me maybe, or give the listeners and viewers as well, an idea of, like what that entails? Because you're essentially doing what a wholesaler does, right? In the sense of cultivating deals. Maybe just give us a little bit more detail on what that looks like when somebody calls in that process.
Sure. So they'll either call in or they'll leave a message on our website. And typically they'll leave an address. If I get the call directly, I will screen them. Obviously, there's a ton of people who are just looking to find out what the property is worth. They're not interested in selling. You have to really get good at realizing which ones are going to be your sellers and which ones are just looking for a number. So it's a screening process. So basically, we pull up the address, we do all the comparables to find out what the resale value would be in that property. Then we set up an appointment to come and look at the property, have a quick look at it, find out what it needs for renovations or for rehab. And we get a little bit more information from the seller. We usually like to have a decent conversation from them. And if you let a seller just tell their whole life story to you, you'll figure out why they're selling and so on and so forth. Most of these properties that we're buying are in desperate need of renovations and rehab. Like we get to hoarder houses, or it's someone who wants to leave, wants to move. They don't want to deal with a real estate agent. They don't want to wait 60 days. They might need their money in 14 days. Those typical type of things. But it's basically getting an address, setting up an appointment, having a viewing, and then proposing them with an offer. And usually we do that within 24 hours.
Okay. All right. So you're dealing directly with them. Usually people that are in distress in the sense that they need to sell for a different reason. They might not have the 60 days, or they might not have
exactly.
the opportunity to create, a house where people can actually walk through. You mentioned obviously the hoarders, but there could be a wide variety of many things. And so let's just say they say, okay, here's the price, and you negotiate and you agree with it. Do you fill out like a blank purchase and sale agreement? Do you have your lawyers do it? Like what does that process look like?
So it's exactly the same as what a real estate agent would do. And we use the REA form. The real estate agent sections are crossed out. So basically we put an offer together. We find out what lawyer they want to use, create a down payment, create a day of closing. And sometimes I can leave that up to the seller, where they may need a little bit more time, but they'll always have the option to close a little bit sooner. If they don't have a lawyer, we can recommend a lawyer for them. But it would be the same process as what a realtor would do, except there is no realtor involved.
All right. So they're not paying the realtor fees. Likely you're going to be able to get a little bit better of a price point at that point in time, just because you're buying it directly from them. And then you close. So let's talk about the renos and what kind of renos you're doing to many of these properties. Are these conversions? Are you fixing them up for, the end user family to purchase? Like, what does that look like?
All our flips right now are for an end user purchase. We're not doing the income suite conversions or anything like that. And we found that return on investment is probably higher on not doing that. There's a lot involved when you're doing income suite conversions, of course, with permits and fire separations and all that stuff. That's timely. For me, I want to get in, I want to get out. We do have standard colors that we use and standard trim, and we try to keep everything the same throughout the property. So, that way we're carrying the same paint scheme, we're carrying the same, hardware scheme. We sometimes change it a little bit to get with the times, but we try to be pretty consistent on the materials and suppliers and stuff like that we do use. And we do pretty nice renovations. We usually don't do lipstick stuff. We're getting in there and doing flooring and new kitchens and new bathrooms and just making it a spectacular property that usually sells. I don't think we've had a property yet that hasn't sold within 24 hours. Let's put it that way.
Wow.
Yeah.
All right. So obviously you've been in construction even longer, and you were talking about flooring and you were talking about kitchen. And I think it's really smart also to have, your color palette and your materials so you can buy in bulk and often get a discount. What are some of the renovations that you think has the best potential to get you that return? I mean, we talk about kitchens and bathrooms a lot, right? But, obviously, what's your opinion on that?
Well, kitchen and bathrooms obviously is a big one. Open concept is another big one. So where we can create open concepts in properties, we do that by removing walls and making open concept kitchens to dining. That's a very big thing today, where you don't want to walk into a house and you're right into a wall. So wherever possible, I think open concept is a great feature and a great selling feature of the property.
Amazing. So what are some of the things that you're seeing maybe other flippers spend extra money on that you would not do in your situation that you think might be a waste of money? Because and I know this is a little bit different because you're flipping to the end user versus doing a burr as an example, right? We don't want to over renovate, but are there certain like materials that you stay away from because you don't, in your area, obviously every area is different, that you stay away from because you don't think that there is going to be as much of a return on?
Not really. I mean, we've been able to negotiate, really great prices with a lot of our suppliers. For instance, most of our properties, we put in hardwood flooring. Just the difference between hardwood and vinyl is very little for us. And for that little extra that we're spending on the hardwood, it just makes for a much better return on investment. We'll use vinyl flooring for things like basement. We try to stay away from it on main floors and second floors. But I mean, I really don't pay attention, to be honest, with all the other flippers and what they're doing. I mean, we have a vision on what our properties should look like. Yeah, and it's very important not to over renovate. Just because you put 400 grand in your property doesn't mean you're going to get it. So you try to look at your comps and what you think the most property is going to pull, and you got to be very careful with that. Like, some people do over renovate, and they just go beyond what they should be doing, and then they sit down and figure out, why did it make any money? Well, two things: you pay too much for the property, or you over rent, and you over renovate. So I mean, a big key is to get into a property with equity. Right, our worst case scenario is always breaking even. That's never happened, but because of the way we buy our properties, we always got equity going into a property. So,
I mean, let's talk about that a little bit. So when you see a property, and you look at the potential after repair value, like how are, that maybe just walk us through how you calculate it in a general format of, like, do you figure out how much profit you want first and then work your way backwards? How does that work for you?
Yeah, I generally look on profit, and I don't like to take skinny deals. I know where a lot of renovators are out there, and they're doing, maybe more properties than I am, but they're working on a 40 or 50 or 60,000 profit, margin. I hear that on podcasts all the time. To me, the risk factor is too high for that. I mean, as we know in real estate, we know what the market's doing today. We have no idea what it's doing tomorrow. So you can't always count on the numbers tomorrow. I try to look at the numbers today, and I don't look at appreciation while I have the property. Always got to look at the worst case scenario. And like our minimum, we like to come out of the property is about 100K. I don't like to do anything under that. And it's not to say that I still don't buy those properties. I do. And some of those properties I will wholesale to someone who's going to, either move into it themselves, or they got to, lower costs in doing things. So we will assign some of those properties. But I don't like to get anything with that's got that low of a profit margin. To me, it's too much of a risk.
Mm-hmm, absolutely. So you're essentially wholesaling certain properties that don't meet your criteria, but they can meet somebody else's criteria.
Yes, and sometimes we'll do that just because of the amount of properties we have on the go. The last thing I want is a property sitting for 8 months because I can't get to it. So we will look at the important properties, and sometimes we'll pick and choose and say, hey, you know what? Let's get that one. That one's maybe an hour out of our region, and it's going to be difficult to get our trades up there. So we have to pick and choose.
For sure. What's your average timeline for a typical reno that you're doing in Simcoe County?
Our average timeline is about 4 months, right? And that's usually from start to finish to getting it on the market. We're usually in and out of a deal within 4 or 5 months completely.
Mm-hmm. Okay. And what about challenges? I mean, obviously right now we're seeing shortages in trades. We're seeing shortages like windows, for example. I mean, it's months prior to that, and a lot of other things, what are you seeing on your end for that?
It is a challenge at time. Windows was a good point that you mentioned, because I've got 3 properties I'm waiting on windows. There's not much we can do about it. I mean, we got to work our way around it. And I mean, we're not going to stop working on the property, but we'll get everything done to the point where all we're doing is popping in windows and getting it on the market. Some supply chain issues where you've gone to Home Depot and picked up, a certain product. Sometimes now you got to go to 2 or 3 Home Depots to get it because that one Home Depot just doesn't have it. But you got to work around it. There's really not much we can do about it, but do our best to get through it and not worry about it too much.
Absolutely. That's great insight. And those at home, don't go anywhere. We will be right back.
Hi, it's David from the Q Theta Fund. Do you know that you can invest in great businesses like Apple and Microsoft and earn 2 to 4% a month just by agreeing to buy those same stocks at lower prices than they're currently trading at? Owning high quality businesses over time is a proven way to grow your savings. Adding an additional 2 to 4% on top of that can allow your savings to grow that much more. At the Q Theta Fund, we use the same proven strategy. We invest in strong identifiable businesses that continue to grow their revenues and profits. We add to this our Q Theta strategy by selling options on these same companies that allow us to manage our risk and enhance our returns by earning that additional 2 to 4% a month. Now, if you would like to invest with other investors who you watch on this show, then please contact me and my email address right here.
Blackjack Contracting Inc. is a premier contractor for real estate investors, having transformed over 250 single-family homes into multiple legal suites. Blackjack is proud to introduce our newest venture, reicontractor.ca. REI Contractor is your one-stop resource where property investors will find trusted support with renovation planning, design, and contractor selection. If you're in real estate investing, you need to check out reicontractor.ca, powered by Blackjack Contracting.
Welcome back to the show. I hope you are enjoying it so far. We are going to continue. But before we do that, let's find out what is new and happening in the world of mortgages. Kyle Ford, over to you.
Thanks. As we move forward in 2022, the big question is what's going to happen with rates? All signs are pointing to rates are going up. As we are at an all-time low, the Bank of Canada has indicated that we are going to see rates increase over the next year with potential multiple rate increases. Before we start freaking out about interest rates going up, let's focus on well-rounded mortgage planning advice. What is your current debt structure on your property? And are there changes that can be made that even if the rates go up, can you maintain your monthly cash flow? This is more important than will rates go up. My standard answer to this question is, will rates go up or will rates go down? The answer is always yes. Rates are going to do what rates are going to do. To be more specific, it is quite clear that the rates are likely going up in the next year. But let's be focused more on our mortgage planning solutions and less on the interest rate. If you're looking to have a review on your current finances and your current debt structure, don't hesitate to reach out to myself and the Kyle Ford Mortgage team.
Thanks, Kyle, for that amazing tip. Manny, we are going to now dissect one of your deals that you've done recently. Tell us about the deal.
This is a property up in Severn Township that a seller reached out to me. They're having some financial difficulties and they just wanted to get at the property and get into a rental. So we ended up going there and actually purchased it the same day. It's a nice property on just under an acre. It needed some renovations, but it was a good fit.
Okay, and how much was that property?
$372,500 for the property.
372.5. And what do you think it was worth on market if he had gone to MLS and had a little bit more time?
I think if we would have gone on MLS, it would have been probably a 475 property.
Okay, so right off the bat, you made about $100,000.
Correct.
Just from purchasing by doing a little bit of extra work that many people don't do with the mailers and cultivating the leads off market. So that is awesome. And he needed to go from a financial standpoint. So how do you do financing on so many flips at once? What does that mean?
So my financing are all private lenders, and private lenders mean relationships that I've built with people throughout the years. So I'm not going through any banks or any brokers or any of that stuff. So they're basically people that know me. I've known them. They followed me. It's just a trust factor. So it's a really good thing that we got going because it works out for both of us. They're making money. I'm making money. I don't have any hoops or anything to go through or appraisals. It's basically making a phone call and saying, hey, I need $500K, bought a house, and That's it. There's nothing else to do except send the money to the lawyer and everything's taken care of. But that's what all my financing is right now.
Okay, so essentially, walk us through this one then. Did how much did the private lenders cover out of that cost?
So I borrowed from a private lender $380,000.
Okay.
Yeah.
So private money was $380K. So you really, at this point, have none of your own money into the deal. You found the deal. You made a couple calls, said I need 380 grand to close.
That's correct.
And so you're already ahead. What are the closing costs?
Closing costs on that were so when I work out my closing cost fees, I look at buying it, selling it, the lawyer's fees, we're about $7,000 in closing costs.
Okay, so the closing costs on purchasing the property, so the legal costs, the land transfer tax, walk us through what the renos were.
Basically, we created an open concept kitchen, new flooring, new paint, trim, lighting. We did finish the basement off to have a rec room, bathroom, and a bedroom, which added a lot of value. There was an existing bathroom, we just updated it, but a lot of cosmetic stuff, nothing structural.
All right, so and how much were the renos in total?
So the renovation costs were in total, including utilities, I always put that in there, was about $105,000.
All right, and this $105,000, where did that come from? Was that private lending? Was that your money?
No, that's my own money.
Okay, so right now you're about $105,000 in of your cash, and everything else is private lenders.
That's correct.
All right, and holding, like how long was the holding period for that?
The holding period was, I believe, it was $17,000 was the holding cost, and I think by the time we had it gone and on MLS and closed was roughly 6 months or just under 5-6 months, something like that.
Okay, so it took about 5-6 months. Your holding costs were 17 grand from paying the private lenders. Now this was a balloon payment that you paid at the end, or were these recurring monthly payments?
I pay at the end. I have no monthly payments whatsoever. So there's zero money out of my pocket except the reno, and that's because I chose that. Because typically an investor would give me 100% of the money that I need, and there's no money paid back until the property is sold and gone. So typically most properties actually cost me zero out of my pocket. I will sometimes choose to use my own renovation just to keep the holding costs down. But probably 90% of the time, I don't do that.
Okay, all right. So 17% paid at the end. So let's calculate your profits, but what was your sale price? So you put it on the market, you sold it within how many days and at what price?
It sold the same day, and we got just under 749, 649, something like that. So 750,000.
So 750,000. All right, that is a great profit when you bought something for 372. And then there's closing costs, right? There's commissions to pay the realtors. There's more legal costs, and then you're essentially paying back your holding costs. What was that total? So
basically, the $7,000 holding cost we have, that also includes lawyers and closing costs when I sold it. That's all lumped into one, $7,000. So the only other costs involved at the end there was the $41,000, I believe, in commissions.
So 41K of commissions for the realtor, so 2.5% for your realtor that's listing it, and 2.5%.
Yeah, actually 2.25% for mine, and 2.5% for the buying agent.
Okay, all right, good. So those are your costs. And what is your profit at the end of the day on this property?
We came out with just over $207,000.
So $207,000 of profit before taxes in a matter of 5 to 6 months.
Correct.
Can't really get that at a job anywhere.
No, and plus we're working on multiple at the same time, right? This is only one deal.
So your profit of 107, I mean, that's pretty amazing. You can't really get that at a job anywhere. What is the ROI on this particular property?
So that return on investment comes out to be what, 197%?
Yeah, so basically almost 200% in 5 months, 197. Because you've got 105K of your own money in, and your profit is $207,000. So 197%, return on investment, I mean, that's an amazing, amazing return. And you're saying that you're currently doing 6 of these at a time. In addition, you're doing multiple more throughout the year. How
Correct.
do you manage multiple renovations at once?
Well, we do have our own crew. And I mean, we've got a system where they're bouncing from one project to another. So it's all about systems, right? Where, one is being painted, the next one's being demoed, the next one's being trimmed. So the guys are moving around. Plus, we have really good sub trades that we've been dealing with for years. And we've been very good to them and they're very good to us. So very reliable when we need something, it's done between electricians, and HVAC and stuff like that. So we've got really good relationships there. So we've got a system where everything flows pretty nicely.
Amazing. Now you're obviously not doing this by yourself. I'm assuming you've got a team of people around
Oh,
you,
yes.
like
yes.
people that you might hire full time. How many full-time staff do you have?
4 full-time staff right now, plus myself, plus my older son who does all the project management. I don't do any work on the projects myself, and sometimes there's times where I don't see the project until it's done. I let my son look after all of that and let him surprise me when it's finished. So I focus on money side, on lenders and finding the properties, and I let him take over everything else.
That is amazing. So, we talked about Home Depot, I think a little bit before the break, but are there like go-to places that you think will have amazing opportunities to do a reno for $105,000? I mean, you talked about, obviously bulking materials, but are there specific stores that you can recommend if somebody wants to get into flipping that they might want to consider?
Well, there's different places. I mean, for instance, we get our flooring from a place in Toronto that only specializes in flooring, but because we do such high volume, so the key is to get by high volume. It's difficult to get into a place and get a great deal when you haven't established a relationship. What we've done is establish relationships with suppliers. We have a supplier out of Stony Creek, and we get our kitchens from there and countertops from there and trim from there, and they drive all the way up to anywhere in Simcoe County. And it's a great service. Prices are great. You drop everything at the job, but that's only because over the last couple of years I've built that relationship. So I think again with suppliers, it's about relationship building.
Yeah, absolutely. And I'm just curious, like how your life also has changed, right? I mean, you were in construction, you were doing it before, and now you're doing it for yourself, and you're flipping, and you're making some great returns and some great profits. How has your life changed, or maybe your family's life changed since you started getting involved in doing these flips for yourself?
Well, I manage my own time. I don't have to be on the job site. I don't have to be in the office. I can be in my boat with my laptop and still responding to to sellers and help my son that way. So I have a lifestyle where I love boating, I love cars. There's so many hobbies that I do. I often joke that I got too many hobbies and not enough time. So it's given me a lot of time to enjoy the things I like to do or spend time with my wife. And I'm not, punching in a clock to get somewhere or being on a job site for 8 or 10 hours a day. So I think from that point is the big change that it has for me, is where I'm making my own time. And we're trying to streamline that where I'm not as much taking phone calls and doing visits and stuff like that. So we're working on that right now, hiring more staff to do that when it comes to marketing and to answering phones and to doing appointments. So that's another thing that we're adding on this year, just to scale. Because as you know, in order to scale, it's all about people. If you don't have people, you can't scale. So that's what we're working right now is scaling that business up. And that's even going to give me more time where, hey, if I want to be in Florida for 5 months on my laptop, I'll be able to do that.
Yeah, absolutely. We do real estate not because we love the brick and mortar per se, but because it gives us that freedom, the lifestyle by design that we are all wanting to get towards, right? And it's great to see you being so successful, and also that you're bringing in your family and your son is interested in it as well, because again, if you can share the wealth and you can create some great opportunities with your family, why not? On that note, Manny, thank you so much for being on the show. Thank you for your insights,
Thank
sharing
you so
your
much,
deals.
Sarah. Appreciate it.
And thank you guys at home for tuning in. Don't forget, same time next week. See you then.